Hey everybody, I'm here talking about the potential of an AI chip memory stock crash. Specifically, Micron Technologies will be the top of the herd there, especially SanDisk stock, all of those companies. But we're just going to talk about Micron and use it as an example here. Again, the biggest name right now, up 1,400% in 5 years. SanDisk Corporation up some 6,000% all time here. They're parabolic moves. They're hockey stick-like returns, as I like to call them. I don't really like them at all. I'm never going to join them. And the reason I believe that there could be a stock crash, let me just get into it very simple here. Now, the numbers look great for Micron, right? 160% year-over-year revenue, whatever the number is. Everybody's all in cheerful mode. And what will happen is that there will be an oversupply of these chips eventually. What is happening is Micron, let's just pretend that Micron represents the whole AI memory stock, it represents a bunch of companies. I'm just going to use that as an example. Micron is here producing tons and tons of AI chips, infrastructure. All the big hyperscalers, Microsoft, Meta, Google, Amazon, are over here buying from these guys, spending tons and tons and tons of money, which is propping up the value of these companies like Micron. Now, again, these companies like the Mag 7 have had a lot of criticism over their overspending in AI to these companies, and now this is the thing. These companies are all thinking ahead in the future for their business. So they're, again, spending tons and tons of money, and what is happening is there is revenue being made over here, like Microsoft is making 600 billion in backlogged revenue from other companies willing to pay Microsoft for their software and their hardware that is being used from Micron. So Costco will come over, all the food branches, the Dollaramas, what else? Wendy's, they'll come over and say, we want to improve our business. Give us a piece of your software that is used with this new AI infrastructure that Microsoft is spending. Yet, Microsoft does not even have the infrastructure made yet, but that's why it's called backlog revenue. It's coming in the future. They're guaranteed the revenue because a lot of the other businesses want a piece of that, but they're not going to go to Micron directly. So what's happening is Microsoft and Google and Amazon and all those guys are making this infrastructure and getting a lot of backlog guaranteed revenue, but there's actually no money being flown into it yet. So there's this there's a lot of expenditure on Micron, as I said, represents the whole general market for that trend. But what is going to happen is there's going to be oversupply at one point, and you'll see the stock kind of crash immediately, as you can see, plummet by 40 or 50% in a single quarter when there's going to be too much supply. When these guys we're going to stop spending all this money, because eventually they will, and they've already expended so much money that I think that at some point they're not going to be able to spend any more money on these companies. So at least they're going to have to slow it down. And once Micron sees that revenue slowing down, the stock is going to plummet. It's going to create some sort of trigger. Again, SpaceX is now an IPO. There's being money flooded into a company that's not even making any money. They lost $5 billion last year. Again, another future speculation, and there's tons of money propping up SpaceX. OpenAI is coming in. All these indexes have those companies within them. They have Micron in there. They have SanDisk. I think they have Micron at 4% in the NASDAQ, something like now. So that's getting quite up there, right? 4 or 5%. So you'll see an oversupply of these AI memory cycles, of these chips, and the stock's going to plummet. As you can see, even with massive growth, Micron is inherently a cyclical memory company. Its stock crashes over oversupply. Because Micron, Samsung, SK Hynix, the one in Korea, are all aggressively spending billions to build new factories, it only takes a slightly leveling off, just a little bit of less of a demand to trigger this glut that they have an oversupply, which will create a stock crash. And I wanted to point out here in this video that in 2000, at the top of the AI boom, took 15 years to break even. So you can see in 2015, from 2000 to 2015, basically 14 years. Well, if I take the top there, which we could be at right now, it would take about 16 years to break even. Guys, do you want to be in that position? Ask yourself that. So maybe don't ride the coattail just because you think you can make 100% a doubling on your money. Do you want to be down for 15 years? That's a risk that could happen. The NASDAQ has been propped up by this, this value that isn't even really there. Micron obviously is making tons of money, but it seems like a lot of these companies are just trading revenues. Like Nvidia is buying from Microsoft. They're making all tons of deals with OpenAI, and it's just circling back and forth, but making each of their balance sheets look a lot better than it actually is. And guys, I think that's what's the key thing here is a lot of this money is just being traded within companies, within Microsoft, going to OpenAI, then going to Anthropic, then going back to Micron. And it's just kind of propping up everybody's balance sheets. And at some point, that's how this bubble could crack. An oversupply, you know, too many IPOs at one time. And you don't want to be stuck in a 15-year gut. So that is why I've made other videos on what you could buy. I buy Berkshire Hathaway, value stock businesses. In 2000, Berkshire Hathaway performed a whole lot better than let's see here, Berkshire Hathaway right here. So again, as I said before, 15 years it took, you know, what's it called? It took 15 years for the AI bubble to catch back, to break even. Now, Berkshire Hathaway in 15 years, you would have made something like, what is that, 400%, right? So there's ways to look at this. And if you just follow along, I'm gonna make more videos on this, but we don't wanna be over leveraged at all in the NASDAQ right now. You know, I guess if you're young, you could use 15 years. You don't need to, but I don't like, me personally, I like to kind of play it a little smarter than other people and say, oh, well, I have a long horizon. Yes, that is about investing. But if you pick businesses that are going to succeed in good economies and bad economies, and you don't chase the hype in the iron stocks, in the Micron, SanDisk, Corning, you know, all these growth plays, they'll come out to bite you. And I really believe that. And I think if you look at history, nothing ever goes up forever. And I think that's the end of the video.